Hello everyone, this is Alexander Horat. Before we begin, if you could please subscribe to the channel and leave a like on the video, that would be great. Today we're having Rick Rule on the show. Rick Rule is one of the most respected and experienced voices in natural resource investing with over 5 decades of experience navigating gold, silver, energy, and the mining market. Hello Rick, thank you for coming on the show.
Pleasure, Alexander. Nice to be on with you.
Yeah, that's great. One thing a lot of viewers are asking about is we're seeing historic highs with gold and silver lately. It's huge news, so I just want to get your thoughts on that.
Well, I think it's been a long time coming, frankly. Uh, Gold, in particular, I would suggest trades primarily as a consequence of investor and saver uh, confidence in the purchasing power of fiat currency denominated savings instruments. I would suggest that the strength in gold price is a reflection of the fact that people are concerned about the maintenance of their purchasing power in savings instruments denominated in US dollars. And I think the reasons for that are very valid. And I think they'll continue, unfortunately. As an American citizen, I wish I could look at you and say that your savings denominated in US dollars, like the US 10-year Treasury, were very sound, but I can't. I wish I could say that I thought the gold price was going down because that means that the rest of your portfolio would go up, but I can't. It's my belief personally, Alexander, that the purchasing power of the US dollar over the next 10 years mirrors its decline in the decade of the 1970s. In the decade of the 1970s, according to the Office of Management and Budget, the purchasing power of the US dollar declined by 75% in 10 years.
Hmm.
Sadly, I think that's the way that we're headed again. If that's true, I'm not saying that because I think it's true, it is true, but if that's true, I believe that one could reasonably expect the increase in the nominal price of gold, which is to say the US dollar price of gold, to mirror the decline in the purchasing power of the US dollar, which would suggest an increase over 10 years in the nominal gold price of between 2.5 and 4 times.
Oh, that's definitely good to know. I think inflation is definitely going to cause the prices to go up, as you said. One thing I was curious, so we see platinum and palladium, they're doing quite well. They're actually going up quite a bit. But in older, not too many years ago, platinum and palladium were actually better than gold. I mean, price-wise. So do you think we'll ever see platinum and palladium go higher than gold again?
I have no idea, to be honest with you, although I think that all the metals will do well. People suggest, probably rightly, that gold is outperforming other so-called precious metals because it is a more broadly based mechanism for defending your savings against inflation and negative real interest rates. It's important to note, however, that platinum enjoys that status too in some other cultures, Japan, Korea, and some parts of China. It is not true that platinum and palladium are not precious metals. They are, in fact, precious metals. And to the extent that the whole precious metals complex gains favor, one would expect the currency role, if you will, of platinum and palladium to increase, at least relative to fiat currencies, if not in relation to gold.
Okay, so the Fed just lowered interest rates again. Do you think they'll continue to lower interest rates in the future? And what effect is this going to have on the U.S. economy?
Sadly, I think they will, and I think it's idiotic. Uh, the signal that the US political class, and for that matter, the US voters have made to savers and investors around the world, is that they don't care about the integrity of the US dollar and its purchasing power. Uh, the Keynesians would suggest that you lower interest rates and you use monetary pressures in a weak economy. But we don't have a weak economy.
Yeah.
This is purely political. Make no mistake, Alexander, declining interest rates are a subsidy to spenders made by savers. In our country, sadly, there are many more spenders than savers. In a democracy, everybody votes for their own interests. And so the spenders are happy to penalize the savers. In this case, it reminds me sort of the old libertarian description of an election, which is where four coyotes and a lamb vote on the lunch menu. In this particular case, the savers are lunch, the spenders are the coyotes.
Yeah, I think that's too bad. I guess that when they get 51% of the vote, then they can basically enact legislation like they want to. So do you think they're just planning to just destroy the US dollar? It almost seems like a self-inflicting wound that they're doing on us.
I don't think they care about the US dollar. I don't think they care about the US economy. Uh, People who would like to buy a home, who don't generate, for whatever reason, enough economic utility to afford a home, would like their interest rate to be subsidized. Corporations who don't earn a high enough return on capital employed to be successful without artificially low interest rates would like more prudent businesses to subsidize them. The US government, which owes 38 billion, oh, pardon me, trillion dollars of on balance sheet debt, would prefer to pay that debt off with artificially low interest rates. In every case, the spenders are organized against the savers.
Hmm. Yeah, so if this policy continues, when do you think the final destruction of the dollar will be? How many years do you think it'll take?
I think that the US dollar will still function as the world's reserve currency for the balance of your, not my, lifetime.
Hmm.
When I talk about the absolute destruction of purchasing power of the US dollar, I'm not talking about the relative destruction. I think over the next 10 years, the US dollar will do okay against the euro, against the yen, against the renminbi, against the Swiss franc, against the British pound. I think it'll do absolutely poorly, but I think it'll do okay relatively. In the period between 1913, the year of the establishment of the Federal Reserve, and today, the US dollar has lost 97% of its purchasing power.
Wow.
I believe over the next 10 years, it loses 75% of what's left. But
Hmm.
I don't believe it's going to go to zero. I believe that a young person like you who is saving needs to maintain some liquidity in dollars because that's what you spend. But I believe that you need to save in gold because that's how you maintain your purchasing power. At the end of the day, likely 10 years from now, when you buy a cup of coffee at Starbucks, you will use a US dollar. Perhaps you, having better education, will use a gold token on your phone. But I don't think that you will see the utter demise of the US dollar, either as a medium of exchange or even a less effective store of wealth. What I do see is that in terms of portfolios, you will see a disintermediation out of dollar denominated savings products and into gold by more and more people.
That makes sense. So, do you think it's better to save in gold than silver? And what are your reasons why?
I regard silver as a speculative asset class. I save in gold and I speculate in silver. I think that silver will outperform gold now. One feature of a precious metals bull market that I've observed three times in my career is that when the precious metals narrative has been verified in the minds of generalist investors by momentum in the gold price, and the generalist investors come down into the precious metals markets, that silver begins to outpace gold. Silver this year, in terms of its price advance, has increased at a rate almost double the price of gold, which would suggest that that crossover has occurred. That notwithstanding, from my point of view, silver is a more speculative asset class. I'm not a speculator in my savings account. I save in gold. I speculate in silver. More properly, I speculate in where I have the ability to the silver stocks, which in prior bull markets have outperformed silver almost 2 to 1.
Yeah, well, that makes sense. Yeah, gold seems to be a better, it has always been seen as a store of wealth. silver is less of that. But so I guess my next question is we see oil. So oil has been doing okay, but it's like people say the gasoline price is high, and yes, it is, but the price has been that way for a while now. Do you think we're going to see oil not go that high, or do you think we're going to see oil skyrocket pretty soon?
Well, Alexander, first of all, gasoline in constant dollars, which is to say in gold terms, is cheap.
Yeah.
Gasoline is not high. The dollar is low. It's important to note that. In your state, the People's Republic of California, the reason that the gasoline price is high has nothing to do with the oil price. It has everything to do with Governor Gruesome uh, taxing the oil industry as much as he can into oblivion. His politics is more important than your economics.
Yeah.
Get that straight. Now that the political lecture's done, let's review the question. I love the oil business. It is a hated business and it's a great business. I've invested in oil and gas for 20 years. Pardon me, 50 years. Time flies when you're having fun. And I would suggest that the current climate for investing in oil and gas equities is as good as I have seen in 50 years for the following reasons. Natural resource based businesses are cyclical and volatile. The cure for low prices, Alexander, is always low prices. So low price environments for oil and gas begat demand and hence higher prices. Better than that, oil is hated. Uh, an investment class that at least bores people, or better yet, hates people, is always a superior asset class because it's cheaper. You're competing with less bidders. And oil and gas is misunderstood in at least three ways. The first is, and it's very popular in your home state, that oil and gas is going to be replaced by sources of alternative energy, things like wind and solar. The truth is that depending on the source that you cite, humanity has spent between 6 and 11 trillion dollars, trillion, over the last 45 years on alternative energy, and we've reduced the market share of carbon as an energy source from a high of 83% 45 years ago all the way down to 81% today. A $6 trillion investment has reduced carbon's market share by 2%.
Yeah.
The big thinkers in the world, Greta Thunberg, Angela Merkel, Justin Trudeau, Governor Gruesome, would suggest to you that peak oil demand occurs in 2030, which is hokum. Peak oil demand occurs in 2060 or 2065. And what that means is that when analysts are discounting free cash flows and the net present value of oil producers, what they're doing is they're ending the value curve in 2030 or 2032 and forgetting the tail on net present value, which is where half of the value in these companies are. That suggests that if you take the public oil companies on aggregate, they are undervalued in the market by 50%.
Mm.
And that ignores another critical fact. Depending again on the source that you cite, the oil companies in aggregate, including the state owned firms, are underinvesting in sustaining capital to the extent of between $1 billion and $2 billion a day. Never mind underinvesting in new project capital by about 80% of their historic levels. This is a capital intensive business. And if you don't reinvest in your business, you impair, sometimes permanently, your ability to produce. It is my belief that the chickens come home to roost with regards to these sustaining capital impairments within the 3-year time frame, which is to say, I believe that the nominal price of oil goes from its current $55 level to $85 or $90 within 3 years. The opportunity then is that if you can find a company that's priced at a substantial discount to its net present value at $55 oil, and the margins triple as a consequence of the price clearing from 55 to 90, what you've done is you've bought yourself a triple at a discount to net present value currently. A wonderful, wonderful opportunity.
Yeah, so what do you think of this? So Venezuela holds some of the largest proven oil resources in the world, yet much of that potential remains unrealized. Given the current political and economic situation unfolding there, what are your thoughts about the possible outcome of President Trump's actions against the Maduro regime and potential for oil exploration?
Mr. Trump needs to remember whose oil that is. It's not ours. If you look up defense in the dictionary, it has nothing to do with the forward posting of forces stealing other people's assets. I'm no fan of the Maduro government, but I fear the Maduro government less than I fear my own. The most dangerous government is always the government closest to you, not the one far away.
Yeah.
The Maduro government uh, does not respect the will of its people, which is why so many people have left. And in a Maduro administration, the probability of beneficiating Venezuela's natural resources, be they oil, be they gold, be they iron, are low.
Okay.
Uh, there are at least two opportunities in Venezuela. One opportunity is the low hanging fruit in the Maracaibo light sweet fields, which have been largely unbeneficiated by the Venezuelans for 15 years. There's lots of conventional exploration opportunities there. Uh, Modern exploration technology, three-dimensional seismic, horizontal drilling, measurement while drilling, none of these technologies have been brought to bear in the Maracaibo Basin. The greater opportunity is in the Orinoco heavy oil belt, which, as you stated, is the largest undeveloped agglomeration of reserves and resources of hydrocarbons in the world, larger than Saudi Arabia. This is trickier stuff. This oil is very heavy. It's difficult to pump, to extract, and it's high sulfur, which means it's very corrosive on equipment. The technology employed in the Canadian oil sands in Canada is the type of technology and the type of capital that will be required to unlock this. Particularly, the best way to unlock that oil would be the establishment of a nuclear power industry in Venezuela, where the waste heat from the nuclear power plants could be employed in addition to cheap electricity to thermally extract that heavy oil. This same technology would work in Canada were it politically popular. There's no other application of nuclear power in the world that would work as well as the application of thermal processing on heavy oil, because what is in every other part of the world, the waste heat from the nuclear power plant could be used to thermally heat and make more transportable those crudes. This would necessitate uh, somewhere between 25 and $50 billion in investments in nuclear power plants before you invested in the thermal cycling of this oil. Clearly, an investment that the Venezuelans aren't capable of making. But something that you should keep in mind as you grow and age. This is the largest source of known accessible hydrocarbons on the planet. What stands between it and beneficiation is politics and capital. The technology is available.
Yeah, I agree that technology is definitely available. So do you think Venezuela will ever open up either from what do you think getting to this first, do you think this is all a bluff right now, all these ships in the Caribbean right now, do you think there's got to be actual war with Venezuela or do you think that's probably not going to happen?
I hope not. If we want access to Venezuelan oil, as we proved in the Middle East, it's cheaper to buy it than to steal it. Uh, that's practical. From a moral point of view, stealing is not a good thing. We seem to justify it when we steal other people's stuff. When they nationalize or steal our stuff, we think it's theft. But when we steal their stuff, we think it's manifest destiny. The fact that the U.S. government has troops deployed in over 100 countries, pardon me, tells me that our political class has never read the dictionary definition of defense. Defense occurs within one's borders.
Yeah, so do you think there's any possibility they might get rid of the sanctions on Venezuela to open up the oil market there?
I think it depends on popularity polls. I don't think Trump cares particularly about Venezuela. I think he's, like every other politician, playing to his base. Domestic politics are more important to Trump than Venezuelan oil.
So
If he asked the oil industry, by the way, the oil industry would say work with. I remember the CEO of Exxon talking about the Middle East conflict, saying, "quote If this is about oil, it's cheaper to buy it than to steal it."
Yeah, so hypothetically speaking, if Venezuela was opened up again and the United States made investments there, would it be cheaper for the United States to get oil from Venezuela than Saudi Arabia?
No, the Saudis will always have lower lifting costs.
Mm.
The upfront capital costs to develop the Venezuelan oil and the very high operating costs because of the energy intensive nature of extraction, and also because of the highly corrosive nature of that high sulfur crude, means that Saudi Arabia will always be a cheaper source of oil. It is estimated by the International Energy Agency that global consumption of energy in the period 2025 to 2020 to 2050 doubles.
Wow.
That means we're going to need all kinds of energy. Are we going to need wind? Yep. Solar? Yep. Geothermal? Yep. Hydro? Yep. Nuclear? Yep. Coal? Yep. Oil? Yep. Gas? Yep. Venezuelan oil, preferably. This is not a zero sum game. There are a billion people on Earth, Alex, that have no access to primary electricity whatsoever. We've done a great job over the last 30 years making the poorest of the poor less poor. And when poor people get more money, the items that they like to consume are commodity intensive. When you get more money, you buy a service or you buy something like art, which is displayed behind you. When a poor person gets more money, the calorie consumption in their family goes up, their energy consumption goes up. They replace a thatched roof with a steel roof. And the uplifting of the poorest of the poor over the next 20 years will be a primary driver in the increase in global energy consumption. Well, or put differently, the doubling of global energy consumption in 25 short years.
Yeah, I think there could definitely be some big changes underway. So, you touched on nuclear a little bit. Lately, I've been having some guests on the show who are really bullish on uranium, and they're saying that nuclear power plants are going to be more adopted in the future, and that the governments where they were originally against nuclear power are starting to like it again. So, I just want to get your thoughts on that, on nuclear power and uranium.
Well, your first assumption is bulletproof. We're going to need more of all kinds of power. It isn't nuclear or coal or nuclear and wind. It's yes and yes. We're going to need more power. Nuclear has the advantage of being extremely reliable 24/7 base load power that doesn't generate carbon. Uh, 5 or 6 years ago, uranium adherents, such as myself, were vilified. People hated us. As recently as six years ago, 75% of the population of Japan was against restarting their nuclear fleet as a consequence of the Fukushima disaster. And over 60% of the US population objected to nuclear power. Fast forward 6 years, almost 80% of the Japanese population and almost 80% of the US population in polls support nuclear power. And the political response to that in the United States was, while 6 years ago, adherents like myself were vilified. In the Biden administration, I was afraid I might see my picture on a post office wall. Under the Trump administration, the morons want to subsidize us. Now, I need to say, I felt much cleaner when I was vilified than I do now being subsidized. But it says a lot about the changing of public opinion with regards to nuclear power. What's happened is that the public has caught up with the physics. Uh, People talk about a lot of stuff about nuclear power. What they don't think about so much is the pace of change that we're going to enjoy. We haven't had a nuclear plant construction cycle in the US since 3 Mile Island in 1982. What that means is that the technology around nuclear power plants hasn't advanced very quickly. Now that the Chinese are building these things like crazy, and now that we're proposing to build 8 of them in a fairly short period of time in the United States, what you're going to see is a progression in technology around nuclear power that makes it ultimately more efficient and also more cost efficient and also safer.
Yeah, I
Uh,
saw in
and
California.
you're going to see it happen quickly. Yeah, even Governor Gruesome has bowed to the inevitable, extending the baseload power capacity of Diablo Canyon.
Right, yeah. So, with all that in mind, are you pretty bullish on uranium?
Of course. Now, I've been in the uranium trade a long time, and I've already gotten everything I need out of the trade. You may or may not know that I was a part of establishing something called the Sprott Physical Uranium Trust many years ago, which is the most successful investment instrument in the uranium business, owning over 76 million pounds of uranium on behalf of hundreds of thousands of investors.
Mhm.
When we established that product, the uranium price was below $20 a pound. So the increase in the uranium price from $20 a pound to $76 a pound means I've already been a beneficiary. The bellwether stock in the uranium sector, Cameco, has gone from $8 to over $100 a share. So when you say bullish about uranium, I don't have to look forward. I can look backwards. I've been personally an enormous beneficiary of uranium. I'm the largest shareholder of Sprott Inc., although I'm not an officer or a director. And they now have about $9 billion in uranium assets under management.
Wow,
Uh,
that's quite a bit.
so, uranium has already treated me well. Looking forward, 3 things to think about. Public opinion has shifted in favor of uranium. The physics were always there. Um, the capital is available and the need is in place to build out the nuclear power fleet. And there is a current supply deficit relative to demand. When people look at the supply in the uranium sector, they count the 76 million pounds owned by Sprott as supply, but there's no mechanism to sell that uranium. It's
Mhm.
in a trust. The purpose of that trust is to hold it. And so they're double counting. When they look at the supply inventories, they look at the Sprott inventory as held for sale. It's not. The only thing that would cause that Sprott inventory to come onto the market would be a substantially above market bid for the entirety of the trust, which would be a rather large ticket. The third thing that people don't understand about uranium, and probably the most important as it relates to the uranium producers, is that the structure of the uranium market is changing. This is going to sound boring to you, but it's critical. In every other commodity on the planet, transactions between buyers and sellers take place at the spot market, although a little bit relative to the total trade takes place in the futures market. In the uranium market, increasingly the dominant force is a long-term contract where users and suppliers contractually stipulate volumes and price ranges for as much as 30 years forward. What that means is that in uranium, unlike any other metal in the world, you have volume and price certainty in the market, which makes uranium cash flow the most forecastable and most stable, and ultimately, not now, but 5 years from now, the most valuable free cash flow in the resource equity space. While this is a given fact, probably fewer than 1 in 1,000 speculators understands the importance of it in terms of the long-term share prices in the uranium space.
Oh, well, thank you for telling us that. So, let's go to copper now. So, copper is increasingly viewed as a strategic metal rather than just industrial one. Where do you see copper going in the future? Do you think it's a good investment to hold, kind of like gold and silver?
It's very different than gold and silver. The dynamics are different. Silver is at once an industrial material and a monetary metal. Gold is primarily a monetary metal, although it does have some fabrication uses. Copper is different. Copper is essential to the material well-being of humankind. We talked about the fact that a billion people on Earth have no access to primary electricity. One of the key determinants of whether they will have it or not is the supply of copper. Copper is necessary to generate power. It's necessary to transport power. And once power comes to your home, it's necessary to use that power. In addition, in this country, there's the electrification of everything. The furor over AI and data centers, as an example, the increasing electrification of the auto fleet. If you reflect on the fact that global energy demand will double in 25 years, you understand the inevitable fact that it is copper and only copper that will enable that to occur. Meanwhile, the generation two older than you, which is to say my generation, has underinvested in copper for 30 years. We've underinvested in exploration. We've underinvested in development. We've underinvested in political development. We've underinvested in infrastructure. We've underinvested in mines. This 30-year underinvestment cannot be addressed in 5 years. Right now, right now, we have a supply deficit in copper, despite a fairly weak economy. It is estimated by Wood Mackenzie, the global consulting firm, that the copper industry will need to invest $250 billion over 10 years to maintain current copper production, which is in a deficit demand. And they also anticipate that demand will increase at 3 or 4% compounded over those same 10 years. Now, when you have demand that is inexorably greater than supply, ration occurs in the market by price. That's how it happens. And there's nothing short of a synchronized global depression, which clobbers demand, that can derail this trend. Let me give you a for instance. Right now, we have a global supply deficit, which means we're using more copper than we're mining. We're making up the deficit with recycling and inventories. And despite that, in 2025, when 7% of world copper supplies came off market due to technical reasons or political disruptions, I'm talking about Grasberg in Indonesia, Kakula in Congo, Codelco, Cobre Panama, a 7% decline in supply in a market that was already in structural deficit has meant that you've only seen a 5% increase in the copper price. Mineral economists would suggest that a 7% supply decrease in a market that was out of balance in structural deficit would have seen a 25 or 30% price response.
Hmm.
What that suggests is that the global economy is weak enough that although you have supply shortfalls, you have demand shortfalls too. As the supply shortfall increases, unless the economy becomes substantially worse, there is an inevitable, and I would suggest, explosive increase in at least the nominal price, the US dollar quoted price of copper, simply because of its utility users and the imbalance between supply and demand. It takes right now something under $1,000 worth of copper to enable the sale of a $50,000 car.
Hmm.
If the copper price doubled, it would hardly change the finished price of that automobile. That means that copper demand is relatively inelastic within achievable price bands for copper. The copper price has to go up, and the copper price will go up. So can go up. Pardon me. So the copper price will go up.
Okay, so you've often emphasized that geology matters more than headlines. What defines a truly world-class mining district, and why does the Golden Triangle in British Columbia continue to stand out globally?
Well, a an important deposit. Never mind district. Let's talk about a deposit first. A globally significant deposit in my definition, has to have at least $10 billion worth of in situ recoverable reserves and resources at current prices. It needs to inhabit the best cost quartile in terms of all-in sustaining costs worldwide, and it needs to inhabit the finest quartile worldwide in terms of return on capital employed, but at least 25%. A district needs to have one or more of these tier one deposits. It needs to have sufficient infrastructure and sufficient access to labor and sufficient legislation to enable the economic extraction of the above deposits. The Golden Triangle in BC has one further favorable attribute. It is in a jurisdiction that's the epicenter of mining finance worldwide. Canadian investors are like US investors and investors in every other part of the world, ethnocentric. That might be a different way of saying stupid. What it means is that Canadians believe that Canadian gold and Canadian copper are more valuable than gold in other places. And that means that, at least in terms of exploration, the cost of capital to explore in the Golden Triangle is lower than it is other places. I'm attracted to the Golden Triangle, first of all, because I know it. I started investing in exploration in the Golden Triangle in the 1970s, which is to say 50 years ago. I had my first experience with producing gold at SNP in the Golden Triangle in 1984. In 1984, as a consequence of due diligence around SNP, I came in contact with the indigenous peoples of the region, primarily the Tahltan band of First Nations, who I hold in very, very high regard. I like the geology of the region. I like the players in the region, many of whom I know. I like the politics, the indigenous politics in the region. I think that the indigenous people in the Golden Triangle have a better understanding of and a better familiarity with the mining process than the overall citizenry in British Columbia, which is to say, far from being a risk, I think those people are allies of the mining industry. I would point out to your listeners that at the Rural Classroom, we are doing a Golden Triangle boot camp, which is to say a very deep dive on the Golden Triangle on January 10th. Details can be found at the Rural Boot Camp or Rural Symposiums. This is an 8 hour long deep dive into the Golden Triangle. We'll learn about the mining history in the region from a family that's been involved in mining in the region for 3 decades. Pardon me, 3 generations, not 3 decades, 3 generations. We'll learn about the geology of the triangle from a geologist who's been active up there for 30 years. We will learn about political and social relationships with indigenous people from Cody Penner, who is at once a mining finance guy and also of the Tahltan First Nation, the dominant First Nations band in the region. We will get an overview of capital markets as it relates to the region from the guy who's been the predominant source of equity capital in the region for 25 years. And we'll review either 4 or 5 companies that are operating in the region. There will be a $99 charge to attend. You will receive recordings because we're going to give you more information in 8 hours than you can absorb in 8 hours. And if you feel for any reason whatsoever that we haven't given you your money back, simply email us and we'll give you your money back. Very few information products in the world that come with solid gold money back guarantees. That's this January 10th, Golden Triangle Boot Camp.
Yeah, that's great. I think that's definitely something good for people to attend to learn more about that. Would you like to tell the audience a little bit more about Battle Bank?
Nothing would make me happier. Any part of your audience that's unhappy with their current bank, I suspect that's probably your whole audience, needs to learn about Battle Bank. The Battle Bank story really begins in 1999 when the people who are behind Battle Bank today formed a successor bank called Everbank. We believed that we could establish a community bank, but across the country, where community wasn't defined by geography, but rather by aspiration. People who wanted to get ahead and people who were technologically sophisticated. We figured out that having an online bank, not having branches, saved us 1.5% money that could be passed on to depositors, to borrowers, and to shareholders. We also believed that we needed to create products and services that were unique to our community. We were successful in that, and we grew that bank from a standing start at zero to $28 billion in deposits over 14 years before we sold that bank to TIAA CREF. The TIAA CREF moved their business away from our customers to their own customers, retired teachers. And the consequence is that the 275,000 customers that we built around Everbank were searching for a new bank. Believe me, Alexander, at age 70, I didn't feel the need in retirement to start a new bank. But when your employees come to you and your customers come to you and say, let's do it again, if you're an entrepreneur, you have to do it. So we're doing it.
Yeah.
We're running now locally, but we will roll out nationally in the middle of January. I'm pleased to say that the bank has almost 20,000 people on its waiting list, people who have already told us they want to do business with us, and they've told us what kind of business that they want to do. That contrasts with a zero waiting list when we opened Everbank. So let's talk about why we're different. The first thing is that we don't have 15 or 20 savings products designed to confuse you. We have one high yield money market account, no fees. Write checks against it, no problem. In other words, interest on your checking account. There's over $2 trillion in deposits in the United States in accounts that don't earn interest. If you're interested in interest, think about Battle Bank. The second thing we do for you is we allow you to save in many currencies. At your current bank, you have a choice between the US dollar, the US dollar, and the US dollar. At Battle Bank, you'll be able to save in 20 currencies. And this multi currency opportunity, believe me, will come into use for you in the next 10 years. There will be a lot of volatility in currency. In the period 1982 to 2022, all you needed to know as a saver was the US dollar if you're American. That luxury is gone. Another advantage, particularly for somebody your age, is that at Battle Bank, your IRA is your IRA. At most institutions, your IRA is a receptacle for their mutual funds, their annuities, their savings products. At Battle Bank, your IRA can buy a duplex or a triplex, which you operate. It can buy a Subway franchise. It can invest in crypto or private equity without President Trump's permission. Your IRA becomes your IRA. On the asset side of the ledger, Battle Bank believes that gold, silver, and platinum and palladium are good collateral. You can use your holdings of gold, silver, platinum, or palladium to secure a credit line. Let's say that you have $1 million worth of gold or silver, but you don't have many cash assets. An opportunity comes up in your community to buy a distressed duplex or triplex. You need the down payment. You can access your holdings of gold and silver without selling them to put down that down payment to secure this distress opportunity. We also, of course, will sell you gold and silver, store your gold and silver. We'll do all those things. Many places will do that, but nobody else will lend you money secured by your gold, silver, platinum, or palladium. So if gold and silver are of interest, think Battle Bank. If you believe that your IRA should be your IRA, think Battle Bank. If you're interested in receiving interest in 20 different currencies in addition to the US dollar, think Battle Bank. That's battlebank.com.
So does Battle Bank give better interest rates than, say, a regular bank?
Well, it's tough not to give better interest rates on your checking account, where almost every bank in the country is at zero.
Yeah, that's true.
It's very difficult not to give better rates on Canadian dollars or euros or yen or Swiss francs or Great British pounds or Mexican pesos or Canadian dollars or Australian dollars when the other banks don't offer products in those. So the answer to that is yes, yes, and yes.
Well, that's definitely good to hear. So I wanted to take the time to share Rick's website, so ruralinvestmentmedia.com. So I think you can sign up for his class there, and it's definitely a good site to go to. And also, I'm following him on X. I think it's a very good idea to follow him on X so you can get a lot of new information, a lot of the important news and his interviews and everything like that. Is there anything you'd like to say about your Rural Investment Media website, Rick?
Yeah, absolutely. Listeners to this who care about their natural resources portfolio can go to rankings at Rural Investment Media, list your natural resource stocks, and for no obligation, I'll review them.
Well, that's
Uh,
great to hear.
List your natural resource stocks. I'll rank them 1 to 10, one being best, 10 being worst. And I'll comment on individual issues if I think my comments might have value. Now, please, no tech stocks, no pot stocks, no crypto, natural resource stocks only. Rule Investment Media, I'll rank them absolutely for free.
Well, that's definitely a great service you're providing. So, Rick, is there anything else you'd like to add in this video?
I think we've probably taken people through enough of what we believe and where we're going from here. I can say this: I think the next 10 years are going to be more challenging than the last 40. The response to that is not to curl up in the corner in fetal condition. It has been said that in every crisis there's opportunity. I'm not suggesting there's going to be a crisis, but I think it's going to be challenging. I think those investors who prepare themselves psychologically and financially will do well in the next 10 years. Unfortunately, I think those people who haven't won't. I hope that your listeners will be among those who prosper in the coming decade, as opposed to being those who are victimized by the coming decade.
I definitely agree with you. I think we just need to look at history. My mom's from Venezuela, so she saw that great country fall very quickly. So it definitely could happen to the United States, something worse. So I definitely agree with you that the next 10 years can definitely be worse than the last 40 for sure, at least for people in America. But I would just like to thank you, Rick, for coming on the show and providing us all with this great insight and your knowledge. And I would definitely like to have you on the show in the future.
I look forward to it, sir, and best of luck to your mom's continuing efforts to make our country proud.
Yep. Well, thank you, and I appreciate everyone watching this video. Please share it with your friends. Please subscribe and like the video and leave a comment for Rick if you have any. And thanks again for watching.